studying your last two. I swim med when turned in. The styren down to mute. And can learn the pole that sunk he died.
One of the biggest challenges in tax planning is not creating the strategy. It is making sure the strategy is actually carried out. A tax preparer may calculate the perfect bonus amount, prepare all the necessary documentation, and identify the ideal tax outcome. But if the client does not complete the required actions, the plan can fail. That is why professional tax preparers often send a year-end bonus instruction letter. The purpose of this letter is simple. It converts tax planning into a clear action plan for the client. On the left side of the slide, we see what often happens when no written instructions are provided. The client may forget to make the payment. They may miss an important deadline. They may be unsure about the amount that should be paid. They may not understand how the payment should be processed. The bonus may never be run through payroll, or payroll deductions may not be handled properly. All of these issues increase the risk of compliance problems and may jeopardize the intended tax result. Notice that none of these problems are caused by poor tax planning. They are caused by uncertainty, confusion, and lack of communication. Now look at the right side of the slide. This is the result when written instructions are provided. The client knows the exact bonus amount that should be paid. They know the deadline by which the payment must occur. They understand that the bonus must be processed through payroll. They receive reminders regarding source deductions and remittance obligations. And they have a clear set of instructions to follow from start to finish. Instead of uncertainty, there is clarity. Instead of confusion, there is execution. This is why the visual in the center of the slide is so important. Without instructions, the process often leads to confusion. With written instructions, the process leads to execution. A year-end instruction letter acts as a bridge between tax planning and implementation. It ensures that important details are not forgotten. It reduces misunderstandings. It improves compliance. And it significantly increases the likelihood that the tax planning strategy will achieve its intended result. From a practitioner's perspective, written instructions also create consistency. Every client receives the same guidance. Every critical deadline is communicated, and every required action is documented. This makes the year-end process more organized and much easier to manage. The key lesson from this slide is simple. Tax planning is only valuable if the client completes the required actions. A year-end bonus instruction letter helps ensure that the planning moves beyond discussion and becomes successful execution. That is why professional tax advisors do not simply provide advice. They provide clear written instructions that help clients turn tax plans into completed results. A year-end bonus instruction letter is only effective if it contains all the information the client needs to successfully complete the bonus payment process. The goal of the instruction package is simple: eliminate uncertainty. Instead of leaving the client to figure out what needs to be done, the tax preparer provides a clear action plan that explains exactly what actions are required, when they must occur, and how they should be completed. At the center of this slide, you can see the year-end bonus instruction package. Think of this package as the bridge between tax planning and execution. Inside the package are several key pieces of information that guide the client through the process. The first item is the bonus amount. The client must know the exact amount that has been approved for payment. There should be no guesswork or assumptions. A clearly stated amount ensures that the payment aligns with the tax planning calculations that were performed. The second item is the payment deadline. This is one of the most important components of the entire package. The client needs to know exactly when the payment must occur. Clear deadlines reduce the risk of missed dates and help ensure the intended tax treatment is preserved. The third item is payroll instructions. Many clients understand that they need to pay a bonus, but they may not understand how the payment should be processed. The instruction package should clearly explain that the bonus must be processed through payroll, that payroll deductions may apply, and that the transaction should be handled in accordance with normal payroll procedures. Next comes the CRA remittance reminder. Paying the bonus is only part of the process. Once payroll deductions have been withheld, those amounts must also be remitted to the Canada Revenue Agency according to the applicable deadlines. Including this reminder helps reduce the risk of missed remittances and potential penalties. The package should also include documentation requirements. Clients should understand which records need to be maintained and which confirmations should be retained. This may include payroll reports, payment confirmations, remittance records, bonus resolutions, and other supporting documents. Good documentation supports compliance and provides evidence that the required actions were completed. Finally, the package should contain practitioner contact information. Clients often have questions when implementing year-end instructions. By providing direct contact information, the tax preparer creates a clear communication channel and reduces the likelihood that the client will make assumptions or take incorrect actions. Notice the message at the bottom of the slide. A good instruction letter eliminates uncertainty. That statement captures the primary purpose of the entire package. The client knows the amount. The client knows the deadline. The client understands the payroll requirements. The client understands the remittance obligations. And the client knows where to seek help if questions arise. When all of these elements are included, the instruction letter becomes much more than a document. It becomes a practical roadmap that helps transform a tax planning recommendation into a completed and compliant result. That is why experienced practitioners place so much importance on the quality and completeness of their year-end instruction packages. A year-end bonus instruction letter does much more than provide information. It protects both the client and the tax preparer. This slide highlights an important reality of professional practice. Clear written communication creates value for everyone involved in the tax planning process. Let's begin with the benefits for the client. One of the biggest advantages of a written instruction letter is clarity. The client knows exactly what needs to be done. Instead of relying on memory, verbal conversations, or incomplete notes, they receive a clear roadmap that outlines the required actions. The instruction letter also helps clients meet important deadlines. Year-end tax planning often involves multiple dates, payment requirements, payroll procedures, and remittance obligations. Written instructions make these deadlines visible and easier to manage. Another major benefit is reducing the risk of missed payments. When clients receive specific payment instructions and deadlines, there is much less chance that a bonus will be forgotten or delayed. The instruction letter also helps reduce CRA risk. By clearly explaining payroll requirements, payment procedures, and remittance obligations, the client is less likely to make mistakes that could result in penalties, interest, or compliance issues. Finally, written instructions improve organization. Clients have a single document they can refer to throughout the process, making year-end implementation smoother and more efficient. Now let's look at the benefits for the tax preparer. The first benefit is clear communication. A written instruction letter eliminates ambiguity and ensures that expectations are communicated consistently. Instead of relying on verbal discussions that may be forgotten or misunderstood, the preparer provides documented guidance. This creates another important benefit: evidence. The instruction letter demonstrates that the client was informed of the required actions, deadlines, and responsibilities. If questions arise later, the file contains clear documentation showing what advice was provided. Written instructions also reduce misunderstandings. Clients are less likely to make assumptions when they have detailed written guidance explaining exactly what needs to be done. Another major advantage is improved file documentation. The instruction letter becomes part of the permanent file and supports the overall quality of the firm's documentation process. Finally, written instructions help reduce professional risk. When communication is documented, the likelihood of disputes, misunderstandings, and compliance issues is significantly reduced. Notice the comparison at the bottom of the slide. Without an instruction letter, the process often relies on verbal advice. Verbal advice can be forgotten, misunderstood, or interpreted differently by different people. With a written instruction letter, the process becomes documented, structured, and professional. The client receives clear guidance. The preparer creates a documented record, and both parties benefit from improved communication. The key lesson from this slide is that professional tax planning is not limited to calculations and technical knowledge. It also includes communication, documentation, and follow-up. The instruction letter serves as a practical tool that strengthens all three of these areas. By investing a small amount of time in preparing clear written instructions, tax preparers can improve client outcomes, strengthen compliance, reduce risk, and create a more professional year-end process. That is why experienced practitioners view instruction letters as an essential part of effective tax planning, not merely an optional administrative step.